Good afternoon. Welcome back to another week of the wheel trade. I'm sorry, the watch list. It's been a long week. Coming back from the flu here, so bear with me as I cough occasionally and walk through this. Matthew's actually out today. He's got the same bug that tried to kill me last week, so hopefully he will be back in business later in the week, or maybe even the next week is fine. He's just got to, heal up. He'll feel better. So today I'm going to try and kind of keep it brief as I am flying solo. We don't have as much witty banter to go back and forth and make it entertaining. So I'm probably just going to review most of the stuff we talked about last time we were on, and I know we've been off the air for a week. So let's go into a couple of our previous callouts, and then maybe we can see what's to be expected in the near future coming forward with this. Got a few things that are kind of moving around today. We were scalping this range here this morning until it finally just broke support here. Now we're looking at QQQ coming into the next liquidity zone, and I usually find those by the 2-hour chart. This is a very old zone we're in, all the way back here from, about January. We're looking at this as our critical support zone, and if things start to get pretty swifty here, we fail a cup and handle, and we just go for broke and go for half back. It's kind of looking eerily so. We may see this resume a trend all the way down to about 492 for QQQ here. So watch this 510 level very carefully. If it breaks, we're going to see some bearish momentum take over here. If it holds, however, we've got a bit of upside, at least give us a half back move to around 527, 528 or so, if things kind of bottom out here and give us a bounce. So watch this zone very carefully. Be aware that it is part of a cup and handle that is threatening to fail here. Let me go into a full-size chart here and get into a couple other bones to pick, so to speak. Let me get the list going here. There we go. We had talked about Adobe, and last time we were looking at this, we were kind of in the mood to maybe kind of wait and see what was going to happen with this. And then we started noticing that this channel on the weekly was pretty obvious. We're looking for more or less a return to mean with Adobe eventually. And, if we get the drawings back on here, this is what I'm talking about, is right back to this point. And if you look at the daily chart, that's basically a measured move up. We were thinking if it holds this level, we could see it hit this liquidity zone, which is about the middle of the channel anyway. But it failed. So we're now looking for half back of this trend here, which we're pretty close to. About 437 and some change would be expected for the rest of this move. When it gets there, keep an eye on things. We might see a reversal around there to maybe get us back into a bullish reversal, and possibly into a reversion trade. First about 451, later on maybe we get up to the 470s here, but let's take a little bit at a time with this one. This one's one to definitely be aware of. And it also is kind of rejected off of that quarter move here anyway, so we're not necessarily taking a position in Adobe anytime soon. TTD, last time we talked about this was when the earnings call just slammed it. Matthew was considering a long here, and I was kind of standoffish, and for a good reason. I was looking for, okay, if I see a reversal down here around 76.50 or so, it might be worth getting involved with this, but this is not a dead cat yet. It's still in trend mode, so we're looking for a little bit more follow through, maybe to kind of appreciate the support levels back in here a little bit first. Maybe we hold around 70 bucks and start to see a reversal there. As for a full-on reversion trade, I think that's still on the table, but only if we see a reversal in here. Otherwise, I'm staying clear of this still. I'm going to wait and see until things get back above this very old pivot. This one here in light blue, this is one that I think I remember putting on the chart at that time, but it refers to a zone that's way back in here. I mean, we were looking at this as a previous resistance zone here and here, and then support here. This was back in the days when we were still picking on Kramer there. So yeah, that's been a while. Overall, I'm going to steer clear of this until it starts to show me a reason not to. So that's where I'm at with that one. Tempest AI, another one that kind of hit a critical target here. We opened right on the $57 area here that we were kind of looking at for key support, and it broke. So now this morning we're looking for a possible move in this previous zone here. And we could see this go all the way down to like 42 bucks here, guys. It's pretty bearish here. But again, watch this area. If we start to form any kind of consolidation here, it's possible we could start seeing a reversion in this trend here. This is a pretty steep descending channel here, so it can give you quick reversions, but just be very leery of chasing things around with this. And then this morning when we saw it open, we were looking at a pretty easy move right from that pivot to a liquidity zone. So day traders, we love this kind of stuff. But once we're looking at it for a swing, we're a little more reluctant once it starts to break support like that. And that's why we're kind of iffy here. If you notice, if this is a primary move, a consolidation, and secondary move, it is trying to bounce off that old zone. So maybe we consolidate in here and get a reversal. But for now, it's more of a wait and see. We looked at SPY kind of the same way we looked at QQQ, just generally looking for bearish retracement. I did not map out this liquidity zone here. That's pretty obvious, but we're in it and we've breached it. So we may follow through with a move down here to like 587 and some change, and possibly see some consolidation for some scalps in between here and there. Things aren't looking the best for the Mag 7 at the moment, and that's kind of a lot of what's playing into this. Before I go into the Mag 7 stocks, let's talk about a couple other things here. So Hood was another one that a lot of people kind of got roped into chasing, and that earnings call was pretty cool, but yeah, it was capitalized pretty quickly, and it broke a key support area, and next target down here about 42 bucks is pretty obvious. Again, wait for this trend to end, and eventually it'll give you some reversion trade setups, but it's not over yet. I think we're still pretty well overall. Let's capitalize Hood just a little bit more before we decide to, I don't know, invest in it. CrowdStrike, again, kind of another one. We hit our target and then some, and we've seen this just absolutely get wrecked and capitalized, and now here we are on, let's see, this is 1, 2, 3, 4. We're on day 5 of just absolute bearishness here, and that is very rapid sell-offs. Pretty ominous that when we find a really nice price target, we're not the only ones looking at it. There are many institutions out there that go and think the same way. That's a great place to take profit. Well, there's capitalization happening here. I know the headlines can come out and say, so odd $1 billion wiped off the market, blah, 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 erased, they say. I love how they love to say that word, erased. Hell no. It's just like any other trader. We're just taking profit, man. That ain't erased. That's capitalized. Use a better word. When you start saying erased, you're just generating and propagating fear and echoing that down the road. We ain't afraid of nothing, guys. We're traders. We know when the market is telling us to take profit. And when we do, it shows when we're all on the same page. And that's kind of where I'm going with this. Bridging the gap between retail trader and professional trader is kind of what I like to do, or what I like to think I do. And in a sense, these targets become really easy to find when you do bridge that gap. And when we're all on the same page, we know that we can laugh at the headlines that strike fear in the hearts of investors and provide liquidity for both the institutional trader and the retail trader, such as myself. We know what's up. We're the little guys, but we can absolutely take advantage of that just like anybody else. And here we are. So with CrowdStrike again here, maybe we'll see some support in these previous little range zones here, and possibly see us get into a couple reversion trades back to pivots. But in the meantime, that's still a pretty steep descending channel as well. Usually when these do break, they do love to give back half, And there's a lot of other equities with the same exact pattern here, just a steep descending channel. You can see it range from angular resistance to angular support, even though it is just straight up vertical. Yeah, eventually when those break, you get a reversion trade. So we just patiently wait. In the meantime, some of us are shorting it. Some of us are running, put debit spreads or puts outright, whatever. Momentum is momentum when we trade. And we're not pulling out our full-on let's short everything in the market bare teeth yet, but we're keeping an eye on things to know when we should do so. Coinbase was another one. That got pretty bloody, but again, we pretty much hit our targets. We've met most of our measured move before, and then we kind of came back down into realizing, well, now we have a primary, half back, accumulations through the center of this, and we're going bearish and closing gaps. Pretty ominous. We know those. Let me get into a couple others here. So we got Apple. This one was probably the only thing that was really green yesterday, but it wasn't all that green. I mean, we did see some movement up above our key pivot area, and that was just returning to the previous high on what we used to call the Wu-Tang W. We get the first low a little lower than the second low, and essentially this is just a move, a half back and a secondary move, and now we see this doji party emerge here. The news is that Apple's going to invest, what, $500 billion, moving some production into the U.S. That's awesome, but that money comes from equity, guys. Eventually, we're going to see some of this capitalized. Probably going to see this continue to crawl around between the pivots here, between like 150 or 250, 260, and 246 or so. Probably going to consolidate for a while before we see any continuation out of this, but it's got to hold this support level of the previous high to really go anywhere. And this isn't really a reversal for this trend because this is just a pullback here. So realistically, we should see this kind of ooze and eventually make its way back to this measured move half here, which is at 250, 260, and sort of channel for a while, and then maybe in the long term it'll finish this big picture measured move here and hit that 283 target or 282 target, but it'll take some time. And if we're starting to see this range into a big old flag, well, we know what those do. They take forever to consolidate and eventually break. And if it's anything like Google, we'll probably see a liquidity trap built into it as well. Let's have a look at Google. So Google, last week I was able to kind of chime into our group a little bit as I was, dying of a man cold, I guess my wife would call it. We've all been there. Come on. Essentially, I was thinking, yeah, Google and a couple other things were starting to look fairly bearish, and I wasn't wrong, even though I was a little feverish at that point. And then I recall that last time we talked about it 2 weeks ago, back in just before Valentine's Day there, we were looking at this gap, and there's the pivot for that gap. Target met, but it's also exactly where the 200-day moving average is. So we could see a little undercut and rally possible here on Google. So maybe we get a nicer reversion trade set up out of that later on. So keep an eye on this level around 177, and we'll see if we can hold that and make a good trade out of it. A while back, I was talking about this liquidity trap on Google, and this was a pretty obvious one. I used it as an example video of how to identify one, and it worked out so well. And then here we are. We went for the bull side of it, rejected, came back down, and now we're looking here. We see that it eventually breached the bear side of it and then continued to run down. So once you've broken the liquidity trap, you can gain momentum and run that trade. Well, it's also a nice primary and secondary measured move. Pretty easy stuff. You can look at it 100 different ways and get the same price target. Realistically, this was one of those, everybody loves to see these gap fills, and this is exactly what happened. It just tripped over the wire and fell into the gap. Pretty obvious. Now, yeah, we may see some reversal here, but just keep an eye on things. If the market stays the way it is, it may drag a little bit lower. It can certainly go and find support down here, but for now, we'll watch this area and see if we get anything reactive out of it. Another couple of mentions, TLN Energy, Talon Energy, pretty obviously hit our target and then came back through support. And well, here we are right back on that key pivot again. Another one to kind of keep an eye on, 197.60 is about where I'd be looking for maybe a reversal if things want to get bullish again. But for now, this is a fairly messy chart to trade, so kind of watch this area. This has been giving us great swings for a while, and then suddenly we got this chop here. Let's cool our jets and wait for something to tell us to get back in that or not. For now, on a short term here, you can see that we're well underway into a possible secondary measure move. So if we do break this key area, this is about a half step down. We may go a little lower. So be mindful of this area. We can see something happen here. Let's see here. VRT was another one that Matthew was talking about last week, and that has followed through the beautiful bearish measured move. That isn't your average 200 period undercut and rally move here, but it can be. So pay attention to this area. We've made a nice move down. We can revert back to the 200 period and then maybe give us a reversion trade set up later back to an LZ up here. Or possibly more likely, let's mark this range out here. So this is probably what we're more likely to see as a short-term reversion in the trend, and then probably reject around there and come back and accumulate in this area for a while. But right down around $85.50 to $86. Watch for a slow burning reversal here, like a little double bottom like we saw back here, to kind of do exactly that. Reversion trades are fairly easy to spot. We just need to be patient and wait for the reversal to follow through and give us a good break. Let me go into the other big dog, NVIDIA. Earnings tomorrow night. This is going to be probably true to the meme. I mean, I'm sure you've seen the Greek god holding up the world and it says NVIDIA on his chest. Yeah, that's pretty much how it's been. This thing's been such a massive piece of the market that it's just how it's going to be. I've been keeping an eye on that 117 pivot for so long that I got tired of looking at it and I moved it up to 120 because that's where it is now. If we can hold 120, it's right on the edge of our previous block here, you can see. So it makes more sense to move it there anyway. But this trend, again, just this really steep descending channel type of stuff here, usually they tend to snap and give quick halfbacks. But where are we looking for price action in the earnings call? And that's where I'm kind of going with this. A quick reversion, if things kind of bottom out here, is right back to 129, 130 or so, give or take. During the call, we could probably even see range run exactly here to here or even here to here. But 120 is kind of the critical floor. If things start to break down below that, well, we know where the bear targets are. They're pretty obvious, right down in here, around that old pivot 110 to 106 range. Easy trade. Looking at this really choppy chart, if you wanted to draw this, you can. My chart's messy enough as it is, but you can see there's an angular resistance up here coming down. I'll draw it and then I'll delete it later. Let's just do that. You guys don't have to care if my charts are messy. I do. I'm the one who has to live with them. So looking at this choppy channel here, those are pretty ominous. A lot of people get chopped up in these things as, you know, just chasing it around, trying to catch a break. It sucks. It really traps a lot of people. If you're scalping it and you're smart, you can make some good little amounts of money doing this. But if you're patient, you wait for these to break. And that's what I would suggest is just wait. This will give us either support right in here and then give us a quick rip to the upside and revert all the way to this liquidity zone, which typically when these channels do break, they tend to break bullish and give back half. So sure, that's a pretty decent target range. But if things end up super critical and, you know, there's any doom and gloom in that earnings call, well, we could see it reach right on down to this level and be fine with it. These channels can actually run the gamut of range multiple times, and typically they go in Elliott wave format, so to speak. You get waves of like 3, 5, 7, 9, any multiple in there. And historically, we can see there's one here that wasn't as playful, but it broke on wave 5 and gave half back pretty nice. In fact, it gave it right back to that previous high. So if you compare this, sure, it can happen. But usually they're not above taking a quick run for liquidity down to base first and then resuming that trend. So that's what I'm getting at here. This one's much more broad than this one. So this is big money moving around, and you can see that this can make some pretty outsized moves in a big hurry. Even in the middle of an earnings call, you could see it band all of that range and bounce those. So if you're quick and you're not damned, you can scalp an earnings call, but I would rather wait for the outcome and be patient with this. So I have some friends who are running some debit spread positions in NVIDIA. I even have friends who are wheel trading NVIDIA. More power to them. They're doing great. But my mode of operation is going to be take advantage of the liquidity. And I'm not just saying this because it's Matthew's ETF, but NVDX has got just the right amount of premium to make me smile from ear to ear. For an average $10, you know, it's monthly yield on the naturals. I call it with the monthlies, about 10% per side. That's a 20% yield. That says I own it for free in about 5 months if I play my cards right and sell the premium right. So that's when one of my new favorite wheel trades aside from TNA here. As for NVDX, I think it could even touch $10 again, maybe even breach it briefly. And if you're going to trade the volatility in the earnings call like I am on NVDX, that's where I'm going to be looking. I'm going to look for a flash down right to support in any one of these similar angulars or liquidity zones and just snatch it up and run a wheel with it. And I'm going to keep running a wheel with it. Even though I'm currently long shares, it doesn't mean I can't change my position size on the fly. I'm happy to add to that one. It's been very fruitful already. Just be careful if you're going to try and wheel trade something like that, and it's your first one. You're going to have to be comfortable sweating a little bit because those numbers move quick, and sometimes you're going to have to sit underwater for a while before you make a long-term profit on it. It's going to take some time, and definitely not one I would recommend to be your first wheel trade, but certainly, if nothing else, if you want to practice it, at least do it on paper. Figure it out, learn the process, and then you'll be as excited about it as I am eventually. So, kind of be careful if you're gonna try it. That's all I can say. Another Mag 7, and you know, I really, I'll have to do it anyway. So if you're looking at Amazon, I mean, you're gonna kind of shake your head and pound sand and be upset with things, but this is really the question that you got to ask yourself. And I know that we want to kind of take this into a webinar format and say, hey, let's learn how to use AI to answer some questions and get with a program of being able to apply our own analysis to it and utilize it. Sure. But when it comes to finding things that are going to lead you to believe that things are overpriced, you're going to find that they're right, but they're also not necessarily right at the same time. Here's what I mean. So let's look at Amazon, for instance, here in the weekly and monthly charts just for a moment. This has been fairly parabolic. Yeah, it's been explosive. You know, it's been pretty fruitful with paying our bills and meeting all of our goals for swing trade price targets, with an exception. I mean, you know, the 2-for-1's rare enough. The 3-for-1's singularly the most rare move you'll ever see when it comes to blocking these trades out with measured moves. And we didn't quite even hit the 2.5-for-1 mark here at 252.14, which is my self-proclaimed analyst target eventually to hit. But we can say that we did poke into that range, and now we're giving back some. This is just capitalization. It's natural. It's a pullback. We've done it here. We'll probably do it here. We'll probably hit around 194, 193 with Amazon here with respect to where we should be for support. I'm just going to grab this pivot and move it up here. So let's say that's going to be capitalized down and give half back of this trend. Now, what we may end up with is starting up as this can become our primary move and half back, and it still puts us on 252.14 for extension in this trend. So yeah, they were at least briefly a bit overbought, but not overall. It's just explosive growth. I mean, Amazon's been kicking butt and taking names, and you know, as far as e-commerce goes, briefly there they stole the crown from Walmart, which is huge considering. So now we're looking for just capitalization, and this is a natural thing. It doesn't mean the market's going to be bearish with it. It just means we're in an area where we should see some correction to the trend or some capitalization to an extent to where we can restore our established belief that the trend will continue. So we need to prove something to ourselves. We need to prove that this level is going to support the price movement from the past as a area where people will stop capitalizing and maybe start looking to go long again. So let's see what happens when we hit the 196 pivot here, and that's about eyeballing rough half back of this previous trend. And then I'll start rebuilding my chart. I'm going to get rid of all these blocks and start over. This will be the primary move. So let's see what happens. You know, if you're going to try and say Mag 7's overpriced, okay, I can halfway agree with you in the short term, sure. But you've got to be mindful of, you know, where do we look in the future? Is it going to remain overbought and then capitalize back down to zero? No. Those companies aren't going anywhere. They're not going to, you know, evaporate overnight. I can, you know, hardly fathom the idea of something like Amazon filing Chapter 11 in the next few weeks. That ain't going to happen. That just isn't. Short of a huge catastrophic global event, just don't go there. Don't let fear get the best of you. Trade appropriately. Trade the chart. Ignore all the crap. So when people come out and say X amount of billion, trillion dollars or whatever was erased from the market, they're just trying to rattle your cage. They don't even know what the hell they're talking about half the time anyways. Just let the media be the media and you be the chartist, because the chartist wins. Let me go into a couple other Mag 7s before I get going here. Meta was one that I don't trade often because I just don't like it. Doesn't mean I shouldn't. It met our target. We put this out a long time ago, the 650 range. Sure. Okay. Now what? Well, it gave us a 1.5 up from there. I don't have to draw it. You can see it hit right here. It came right back to our area as support. So now what? Yeah, short term, it's probably going to get capitalized a little bit more. I would like to see Meta come into a little bit more liquidity, probably right in this previous high here, before I can go long on it. Just because I don't like trading it doesn't mean I don't. Sometimes I do. I'd like to see price touch this area a little bit around 635 and then maybe consolidate in between here and our high pivot here, or our previous price target here, and give us a nice thorough capitalized half back of that previous trend, and then maybe see if we can resume bullishness. But Meta, I mean, it's kind of old school. I guess the newer kids aren't using meta as much as they like to admit, but they are. I don't think it's going to go anywhere, guys. This, in spite of Zuckerberg, flipping his position and getting rid of a bunch of his fact checkers and all that stuff. It's just it's a bunch of window dressing. But in the meantime, it's still a successful company. It doesn't matter what publicity the guy gets; it's still going to be here for a long time and still progressively growing equity. That's all. Oh, sorry, I got somebody on the chat here. Hey, Jeremy, hope you're doing well. Yeah, I'm doing okay. Sure, if you are open to checking some tickers from the audience. Absolutely, I'm always happy to check tickers. So if you want to shoot me one, feel free. Let's see, you're very interested to get your view on Walmart and NU. Let's have a look. I'm going to look at NU first, actually. NU is one that I haven't looked at in a while, so I wanted to look at that one first. So we're seeing this consolidation where we got the broadening pattern, and we talked about this before, where we get the compression pattern after the broadening pattern, and we end up with a big diamond. And that's a weekly chart, mind you. Those are weekly candles. It's a big amount of time. We've met our bullish price target on that, but we've capitalized it since, and now we're kind of consolidating. What do you mean no data? Hey, give me that. Let me draw the other side of this, and this is where I want to see. So we're looking for angular support to hold here, and there's your angular resistance on this thing, and maybe give us a quick reversion trade. I would say to about $12.15 or so. And if you look at this liquidity zone, it's pretty obvious in here. Let me grab that candle. If we can get back into this area, we've got a pretty good shot of remaining bullish. But with a diamond pattern, it's not a reversal. It's not a continuation pattern. It's kind of both. It's just consolidation. So what it gives you, though, is it gives you channels. So now we have, this is our channel that we're in. And whenever we draw a channel, we split the difference and find the mean, or the reversion or regression line, I like to call it, or it's generally called. I don't know if it's just me. This is an area of interest. So if we can bounce off of this angular support here and get back into the bullish side of this regression channel here, we can see that it would likely return to this liquidity zone here. So looking for a swing for reversion back to about $12 and some change would be ideal here, but it's got to show us a good solid reversal here first. Here's the 2 hour, and there is a nice looking double bottom here. We got L1, R1, L2 is printed. All we need to do is break this resistance here around 1135 and we should be on our way. So keep an eye on that level. That's also going to be resistance. If it can't break that, reversals can fail. I always say a double bottom can be a bear flag if it has the right conditions. So also, I like to split the difference. So if we're looking at a game of high, low, mid, this is the support it has to hold. So if we're going to go and break this resistance, it's likely to test this for support first and then continue to move. If it breaks 1135 and starts to trend, sure, easy reversion trade. If it rejects the reversion trade, it can come back and accumulate here for a while. It's still got room to stay within the compression side of the diamond pattern, I like to call it. And it's got days and days and days to do that. So for NU, I'd like to see it consolidate, finish this double bottom, give us a nice move, and then we can see about swinging it a little bit more later on. But for now, short term, it's gotta break this resistance to give us this trade. And then if it rejects, well, it can also have some downside risk because we still have the other half of this channel. So be aware that if this fails to be bullish here, that's where it's going, or at least halfway there. And we can split these channels too. You can see where price tends to have those angular trend patterns, trend lines within a channel. They all kind of line up. So, if you will, draw a line there as well. half and whole is always the rule, and if you start seeing moves break zones, well, half and whole is also the target. So pay attention to that. All right, let's have a look at Walmart. I haven't traded Walmart in too long. One thing I have noticed, I'm not like a fully um, glorified, mountain biker, but I'm an avid mountain biker. I love riding bikes. But I also love paying attention to the industry, and I've noticed that Walmart is really making leaps and bounds to get into that industry. You're starting to see some of the management make some pretty solid decisions on being able to get into niches where a bargain retailer would like to be, making smart decisions. They're staying with the trends, and they've got some really nice offerings under their Ozark Trail line for some of their at least entry level grade mountain bikes that are actually upgradable and worthy of being able to beat down the trails instead of being like the general classification of depot bike, where you get something that you buy it for 150 bucks and then it might last a year and then it's never going to be worth upgrading or even maintaining for that matter in some cases, because they just don't put up with the abuse that a mountain bike is supposed to put up with. What I'm getting at is Walmart has broken that cycle, and now you've got a whole bunch of other manufacturers on the run. Well, you've got like Schwinn, you've got Diamondback, you got all the other current depot bike manufacturers being put under pressure because Walmart can produce. That's just one product. So, I mean, they've also got, a pretty reasonable selection in their automotive stuff. I've noticed they've been able to compete with a lot of the major automotive filter and lubrication producers, batteries, all that type of stuff. That department has gotten better and better and better. We used to joke around and say, ever start batteries were like never start batteries. It just didn't last long. Well, they're starting to actually produce some decent batteries. They've been upgrading their lines, and they've been actually making decent decisions in many of their departments, and it's actually starting to become a much more fruitful long-term business model. So I'm generally bullish on Walmart from an investor's point of view, but I'm also looking at the price action, and it's just been popping. And now we've got it capitalized, and it's already on the swing for the upside. So we're starting to see that there's a bit of a broadening channel here. Let me draw this here. This is kind of dirty, but you can see that it's trending within this range and then kind of split the difference here for short term. We're looking for a nice little swing, maybe to give half that back and say target around $100.50 for the short term. That reversal was pretty quick. We got a nice hammer right on that angular, and I'm willing to bet this is a nice setup for the 50 period undercut and rally that Matthew likes to look for, and that's been confirmed. We're above it. And currently we're right up against the resistance here in the previous consolidation range. So let's draw this as a short-term target. It doesn't have to be perfectly straight. Let me make that stand out. So current target is returned to this location here, right around $97 and say 20 cents. Short term, and then if we break that for resistance, reversion trade all the way up here to about $100.40 is pretty obvious. We could probably see this turn into a decent consolidation range in that area, and then we'll see some continuation later on for following through with the rest of this trend. Being that we're in wave 2 in this channel here, and we've tested the range on it, be aware that the previous high is likely going to be rejected at least once or twice first in consolidation. In other words, this is likely to become a bit of a bull flag at this point from here. So let's see this range around in here, and we'll see if we can continue running a little higher in the trend. Overall, though, we've been fairly ballistic in this thing, not just parabolic, but nice growth. Walmart's been kicking butt and taking names, and I'm certainly a believer in the business model. Just looking at it from the outside and in the industry side of things, I can see some changes that have already been implemented. They've been in place for a while, and they're starting to really come into force here and be a very, very positive influence on Walmart as a whole. So doing really well. And I love mountain biking, and that's just one of their many sectors that they dabble in. For a grocer, they've got that pretty well cut and dry. I mean, they've been doing that forever. They've been able to stay in a realm of buying power, and the quality is okay. I know that us who prefer higher quality groceries can get them elsewhere, but for the most part, everything a consumer needs is available at Walmart and at Walmart online. They've been kind of ramping up their efficiency and being able to literally deliver straight to your door groceries and things. And their online presence is something to be trifled with when you're talking about Amazon. Briefly, Amazon stole the crown for online revenue, but it's probably in the realm of being given back very quickly, if you know what I mean. So, as for like ordering bikes on Amazon, you're not going to get as good a bike. But I still am going to order lots of different things on Amazon. But I don't like their bikes comparatively. Walmart wins. Let's just say that Walmart is making some very smooth decisions from their management, and things are still looking pretty positive. And price action wise, targets are pretty easy to find for it. Pretty nice little scalp back to 97, obviously, and follow through with a reversion trade about $100, $100.40, pretty reasonably. Long term, be aware that that's still got to give you a little bit more consolidation. So I'd like to see a nice big long bull flag start to form right around here. That'd be ideal. I've got time for any other requests, so if you guys want to drop me a ticker in the chat, feel free. Otherwise, I'm going to carry on with a couple more before I go here. Let's see, did I look at Microsoft? I did not. Microsoft. So short-term bearish, we're looking for resume down here to about 395. Pretty close to touch that this morning. I need to redraw some things here, so let me get this if you allow me to graciously draw this out a little bit better. Allow me to take some of your time, guys. Appreciate you. So looking for a move like this is pretty ominous for Microsoft, but it makes sense because our previous liquidity zone takes us right to it. I'm talking about more of a half measured move down from here first, and it's kind of underway. We're looking at support breaking pretty much right now, and the key zone here is going to be that 395 pivot. If we can break that with some force, yeah, look for a move at least to about 390 out of that, and that's where I would be kind of cautiously taking profit if I'm bearish on that. But the liquidity zone is still a little further down. We could probably find some buyers in this range. Sorry, starting to get the sniffles again. Not fully over the flu here, guys, so bear with me. About 388 or so is the top of that range. 383 is the bottom of that range. Look for buyers in that range once we start to make this move happen. Can it break through that and go even further? Sure. I mean, it can go right back down to previous support, which makes sense because it is exactly a measure move down from this block here. But I would say take cautious take caution shorting Microsoft. I mean, they've got a lot more irons in the fire than one would think, and we could certainly see these descending channels give back half very quickly when they do pop. Will it be new money buying? Probably not. It'd be probably shorts covering at that point. They know where to cover, and that's this range here. So we could see a quick move off of this pivot right back into a reversion here short term, and then maybe reject it and give us a little bit more for the bearish move overall on the swing traders side. Looking for this move to play out. Last but not least, we should look at Tesla real quick before we go. That's, gosh, man. People are kind of putting a lot of lean against Tesla because of the political things that Elon is roped into now. You guys can't forget that Tesla's still a successful company in spite of many wins against it, so to speak. Hey, you're welcome anytime, man. Let me take that out. Anytime. I love price action, so I enjoy being given tickers to look at. But Tesla here, man, be aware that at any moment this thing can just snap and rip your head off. So if you're short, be careful. We're hitting support areas pretty quick here, and I'm just going to draw this out here as our previous block here. 291 is right around where I'd like to see support happen, and maybe I'm going to throw another pivot in there for target. Be careful if you're shorting this, because it can absolutely do an about face on you. I cautiously ran some put debit spreads on it, and I'm okay, but that was done back here before I caught my death for a week. So let me refrain from adding a short here. I think if you are already short on this break of the 355 or 335 area here that we pointed out not last week, but the week before, we briefly touched on this. We were talking of a possible move back down to support in this range here, and it smoked it today. So be aware that typically when you see a very fast move like that, they tend to give half back just out of nowhere, and most of that is just shorts covering. So watch for a reversal really quickly here, maybe to take shape and give half that back to about 317, 318 or so, just as a day trade move. It might even just give us a wick back to it in the afternoon and then resume. But just be careful, because this thing can make your head spin out of nowhere, and it's got plenty of volume in it to make it do big things really quickly. Even though there's no earnings call coming up for a while, it's been and done with. Overall, we could see some pretty quick moves once it hits targets. Can it break this area and finish the move? Sure. There's obviously a gap here to close, but just be very nimble if you're going to screw with Tesla, because these things can get you offsides real quick. And if you're looking at this descending channel here, wave 3 ends right here. And if it bounces back fast, and it can give you very quick reversions everywhere on the map here. We got 335, 336 is pretty much the next range for a move back. It can also go as high as 360 and 380. Those are some big moves. So yeah, be nimble if you're going to screw with this thing. I'm going to wait patiently and see what happens in the long run, and maybe look for some bullish moves later on, because it still did a fine job meeting all of our bullish expectations from before. It can always go back and test them for resistance. We could see this turn into just the most massive long bull flag you've ever seen in your life. That's possible. And then there's this giant rounding here. This is where a handle would be if this were a cup and handle on a monthly chart scale. That can happen. And we can see range pick off very quickly in those. So just be nimble if you're going to mess with Tesla. I would rather mess with like TSLT. Great premium to be had there, by the way. I might be making some wheel trades in there soon. Even though I'm already in NBDX, I'm liking TSLT. The volume's just about there in the options chain for where I like to be. So just kind of clue you in on that. I'm going to take advantage of volatility, and when the time's right, it's kind of one of my other purposes. Last one before I go, MSTR. Man, this thing's awesome. So we've been all over this thing, and we were blown away by this massive, massive move. And this is like where everybody's hopium is going to be focused later on, even though they're chasing a descending trend. So now we know where the support area is right here. About 240, 280 is where my previous bull target was. That was a 1.5er. That's still valid for support here, but do I see it happening today? Maybe not in a day, but let's look at the next block here. So if we were to size this up, we're at the base of a 1-for-1 now. Can it extend there and give us a halfback? That's the short-term possibility I'm looking at. So watch down here around this range for a potential reversal for a halfback or a reversion trade. I like to point them out either way. We may see that start to materialize down here and around the 240, 250 area. So watch for one. It can give us a pretty nice little move. Would I mess with them too much after the fact? Well, the last thing I'm going to look at before I go today is actually Bitcoin, and I had a 92K target on that got nailed and obliterated. From there, we could see it all the way down to like 83, 86 is another pivot. Let me get into that chart. But that's where MicroStrategy is. They got a lot of weight in there, and we know that if it gets bought and there's liquidity there, and there's people buying a lot of crypto with both hands, so to speak. I think I know someone who knows what they said. Just be careful, because there's a lot more to the liquidity in that than you think, and you don't want to be exit liquidity. Let's see here. Why is the market crashing? Are you swinging or are you trading? I'm swinging and day trading. I love to scalp futures for just short-term stuff, but I also love to swing trade, and I am a long-term options seller too. So I like to invest in long positions that I sell options on. So if you look at the wheel trade strategy, that's what I do. You kind of want to learn at least a little bit about options trading before you go and do that. But I trade anything that moves. I just love price action. So what I'm doing here with the show is just kind of putting out price targets for people to follow. As for Bitcoin, real quick before I get too distracted. At 92 target, blown away. Now we're looking for a bearish measured move possible to follow through here. We're looking for 84.2. And again, I was saying that there was one at 86 that we just rested on now. And there's another one down here, if you want to point out, about 80,500 is about halfway after this move. So there's a lot of liquidity in this range. As you can see, it didn't spend long there before. So at any moment, you can grab some quick halfback moves, and that's why I love to scalp those reversion trades so readily, because when they do happen, you can start seeing that they will accumulate at some area and then get back. So my previous bear target was 92K, and that's right at the top of this range here, and it smoked it. So now we're looking for that as a reversion target. So if things start to give us a quick short-term reversal here, and we did, kind of clip into that 86 pivot, we can likely see a quick move back to that. So again, don't be someone else's exit liquidity on that, but be ready to scalp it, because it's got plenty of moves in it. And I'm going to watch the short term on this. This is just another one of those steep descending channels. Love giving half back, and at any moment we could see a nice breach of that channel and a quick half back on that. So I'm going to draw the line here. We're looking for a move to come back into the angular on this channel first, and then if it breaks it, we can see it resume the half back move. But until then, just be very spry and feel free to scalp the short-term stuff all you want, but be aware that when time comes and the liquidity is grabbed, it's going to be fast. So just be careful. All right. I do teach options, and also I'm part of the Bullishbrs community where we go and hands-on do that every day in our live streams, as well as in the midday. Sig is an options guru, I would say. Well, we don't like to use the word guru because there's plenty of fake gurus out there, but we would say that, well, I would say that Sig has probably forgotten more about options than I'll ever know, but I know enough to make a living at it. In that sense, we do teach both basic option strategies as well as complex option strategies. So if you dig into our blog even, you can probably answer everything that you have as questions about options by just doing a search on our blog at www.bullishbrs.com. If you wanted to learn on paper there, get a feel for it, and then come check out our community. That's where we can do stuff hands-on. We love answering questions in real time anytime you ask them in our community. And while I'm live streaming on our YouTube channel, why not? But yeah, we do teach a lot about options trading as well as price action. And the fundamental to learn before you mess with options is price action. You got to know what you're doing with price action analysis before you start trading options. Options are great. They're awesome leverage, but that leverage can work against you if you're on the wrong side of it. So you got to know where to put the brakes on and exit, and reevaluate your position into taking a better trade next time. So there's a lot more to it than just trading options. There's a lot of details. All right then, guys. I'm going to sign off. Thank you for joining me. I really appreciate your support. Please throw me a like up above anything. The more we can break YouTube's algorithm and start to actually grow our channel, and we've been experiencing some decent growth lately. If you've noticed, we've gotten above that 92,000 subscriber level finally. We're going for 100,000, and we appreciate your subscribing. We really do. But the likes will help us get to there. So please throw us a like if you don't mind. If nothing else, a like is all I could ever ask for. If I'm helping even one person in here, one like is all I need. Thanks very much, guys. We'll see you next week or later in the week on Thursday. And hopefully Matthew's well enough to do the next thing that we're doing. And they did one episode last week without me because I was down with the flu. Now it's Matthew's turn to have the flu. So we'll see what we do on Thursday. But we're trying to do a little thing in a podcast sense where we call it Rebel Finance. It's going to be lots of fun. Join us on Thursday. We'll see you then. Thanks, guys.